Hey everybody, this is Jim at SP500chart.com, where we use time-honored techniques to understand modern markets. And we feature daily technical analysis videos of the S&P 500 index. Why the S&P 500? Well, I think it is the broadest indicator of market health. It's a wide variety, a large basket of stocks, as opposed to the Dow Jones 30 Industrials, or looking specifically at the Russell or the NASDAQ, unlike the S&P. But before we take a look, I just need to remind you again that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I'm going to add something here. Investing is risky. You can lose some or all of your capital. It can happen. And so for that reason, even though I can draw lines on charts, you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I am just a guy who draws lines on charts. So, yesterday at about 3 o'clock, and I guess that coincided with, I was busy all day yesterday, wasn't really following the news. I guess that coincided with some remarks by Ben Bernanke. I'm assuming, I don't know for sure, but there was a news release. I didn't even bother to see when it lined up with that rally right at about 3 o'clock. It really doesn't matter because the rally happened. It overcame one line that we were expecting to serve as resistance. In fact, it overcame a second line that we were expecting to serve as resistance, but it could not, at least not yet, overcome this top line that should have definitely served as resistance if our rising wedge here was and is a legitimate observation in the chart. I think it is. And I mentioned that there are actually two wedges here. It's what makes this a little tough to get a handle on is the fact that, let me move this line as I have to do from time to time, is that we have this small wedge right here bounded by this top green line and this bottom green line. But then we also had a possible interpretation of the chart making this an even larger wedge pattern. So, whatever. The fact is, both of those wedges broke down. The green one here, back on the, roughly the 5th of March, slightly on the 2nd. And then this blue one broke down decisively on the open of the 6th. But since then, the S&P has made an impressive recovery of just a little over 50 points. But you can see that this top line did put the brakes on this move. Now the question is, are we seeing a flag develop here that will lead to even more gains? Well, I think we can probably do ourselves a favor by marking this, just in case that's what we get. Okay? It would be a little bit of an irregular flag because it's kind of slightly widening as opposed to the typical pennant, which constricts. In other words, if we had this shape right there, and we didn't have this rally here in the middle of the day, if instead we stayed in these lines right here, I would say, yeah, I think this is going to come down and bounce again and head up. But we have this. So for right now, I'm gonna look at two different things. I'm going to keep my eyes on these lines here to see if this is a flag in developing. Or the other possible interpretation of this is that this was just a little kind of a double top, and it broke down, and now this is something of a back test. Now that would make sense with the back test on on this green line right here, but let me back up just for a second. Yep, that would make some sense. I just wanted to make sure this line hadn't jerked around on me as I moved in and out. That is the proper placement for that lower green triangle. So since this has been a technically significant line and that did break later in the day, you know, it could be that this is something of a little double topper here. It doesn't have a huge implication to it because it's not that tall. As a matter of fact, all you could really expect from this is a move back down to maybe 1387, 1388. So this is what I offer instead. Is let's use this line right here as a rising support line, and when this breaks, then we can consider that perhaps this leg up off of the 1340 level is going to come back down for some form of back test of some broken resistance that took place weeks ago even. And I'll show you what I'm talking about. We broke this line right here and never really came down for a back test. Okay? We also broke that 1378 line here as it is drawn across the chart. It lines up very closely to that 1370 high back in May. We just kind of blew right on over that. So I'm thinking that some of these levels back here are deserving of a back test, and frankly I would expect at some time this line to get back tested. I can't tell you when, but at some point in time this blue line right here probably deserves that treatment. So for right now, I think the thing to do is just to look for short-term chart implications. The long-term implications really aren't there right now because we have satisfied the minimum requirement or the minimum expected target of everything that has developed in the chart to date. So as I mentioned the other day, when the market got to 1378 here back in late February, that satisfied the inverse head and shoulders pattern, to where once we made that mark, you can no longer, or at least I can no longer say I'm expecting more based upon that pattern. Now again, we do have that long-term trend line over the top of 2007 and over the top of 2011. I do not think the market is going to take that line out to the downside. I do think, however, that needs a test, but it could take a while. You know, it could take a while, and so that's really about all I've got to add right now. Kind of on cue, as I mentioned, as we were looking at this yesterday, and I was struggling somewhat to make sense out of that late day move. The S&P did turn back right just maybe a hair over that fairly long-term resistance line, because that line has been operating since the beginning of December, and it's been tagged 1, 2, 3, 4, 5, 6, 7 times now, and the S&P has been unable to get over that line. So is it possible that it gets over the line? Sure. But is it likely? Well, based upon the chart, no. Based upon the chart, the odds say this line should not break. It could, but it shouldn't. So for now, in a nutshell, I'm looking at this pattern to see which way it goes. You know, one of these lines will get taken out either to the downside or to the upside. And if it's to the downside, then we look for this line right here. If this breaks, then I think that that probably should start the wheels in motion for a back test of some nature. How deep, I cannot tell you, but I think that it could very easily shed 2 or 3%, and at the most we run into this green line right here. If it breaks, then we run into the blue line that I've been talking about. So right now, the moral of the story is, to my eyes, the S&P is much closer to resistance than it is to support. So that means it's starting to look a bit toppy. And so anyway, look, just take it under advisement. You have to do your own research. You have to do your own investment decisions. I remain long in a few select stocks that are doing pretty well. But I've also got targets in mind where I will sell either all or partial sums of those shares. I do plan on letting profits ride in some of those, but I don't think that the S&P and the markets in general are going to suffer any large losses. So if you're bearish on the market in the long term, I think you will likely be disappointed. But you know, that's more of a hunch than anything I can show you in the chart. And my hunch is based largely upon the, so I'm going to have to go to a monthly chart. Hold on. See if a 9-day, there we go. My hunch is based largely on the fact that this is a line that is almost parallel from the tops of 2000 and the tops of 2007. We've come so far, it just doesn't make a lot of sense to me that the S&P would come this far and then just say, nah, I don't have it in me, especially after having gotten over this line right here. Had the market turned down at this blue line and then started heading back down to 1100, then I would think, well, maybe this is something of a big, huge head and shoulders here. Or in best case scenario is you'd start looking for if a break of this line, then you would look at this as being a large head and shoulders pattern that developed over the past 3 years with some pretty dire implications. But we're over this now. So I think you've got to realize you have to take that for what it's worth, and that is, I believe this market wants to charge higher, and I think it's going to want to get into the mid-1500s, and I think it's going to want to come on up to this line. Next week, of course not, but probably sometime within the next year to year and a half. So look, that's my story, and I'm sticking to it. Thank you for taking time out of your day to watch the video. Thank you if you're a subscriber. If you're not, just think about it. It's pretty cheap, and you know, I think these chart patterns work out pretty well. I will apologize for something. I don't really need to apologize, but I don't feel that I ever want to tell anyone what to do with regards to the markets. I don't ever want to tell somebody, here's where you buy, here's where you sell. All I want to do is in as objective a way as I know how to point out what is happening in the chart using traditional trend line and pattern analysis. And you make up your own minds whether or not you think whether you even think this works or not. But for those of you who subscribe, I appreciate it. And I hope, if nothing else, you will gain some sense as to the degree of reliability of these methods. So if you come away from it and you subscribe for 6 months and you go, you know, that technical analysis stuff, it obviously doesn't work. If that's your conclusion, then I hope you feel that your investment at least was an honest look at these methods. And if you draw the conclusion that it doesn't work, well, then at least you got to follow it in pretty much near real time. And on the other hand, if you feel that these things do work, then I hope you will pursue it more. Stay tuned. I try to do a video after every day's close. So look, thanks again for watching. Take care.